Hi everyone, I'm David. Thanks for clicking and welcome to this video on a continuation strategy using the harmonic patterns, but in a slightly different way. Harmonic trading exploits an enormous array of effective Fibonacci alignment combinations to define patterns. The most famous are Gartley, Bot, Butterfly, and Crab. I exploit these patterns in my strategy, but in a different way than their classical use. Indeed, I don't seek for potential turning points of the market, but patterns of continuation of the trend, with a well-defined target area. What does it mean? Harmonic patterns are reversal patterns. The completion of a harmonic pattern identifies a potential reversal zone, where the trend most likely will reverse. My strategy, instead, takes advantage of the completion of the last leg of a harmonic pattern by reading the trend. Let's see how with an example. I take as a starting point a trade of a friend of mine. The pattern I'm going to exploit is the crab. You can see in the picture the characteristics with all the Fibonacci retracements and extensions. This, instead, is the British pound Australian dollar daily chart. I state that you can use the strategy in any asset, stocks, forex, futures, and so on. In the last month, the currency pair has risen. By applying the strategy that you are going to see, it was possible to get a significant profit. Now, let's see the same chart but with some trend lines. Now, on the chart, we can see something more familiar. What is forming is a bearish crab pattern. It's not completed yet, and therefore it has not given a bearish signal, but as I said before, this is not the kind of signal I'm seeking. What is my idea? Try to ride the last leg of the crab pattern, the one that brings the price from point C to point D. How? Simply by opening a long trade after the breakout of the brown trend line. That is, the line that starts from point X and passes from point B. Let's see the chart now. Now, the pattern on the chart is clear. It's, as I said, a bearish crab that's not completed yet. It will be if the price reaches area 1.99916 to 0.00612. That is also the target area of the long trade. And what about the stop loss? You have to set the stop loss about 15-20 pips or ticks below point C. Another double example with the coffee futures daily chart, with first a bullish bat and then a bullish butterfly, but not completed yet. The breakout of the trend line will give the sell signal of the futures. Does this strategy seem complicated to you? Maybe at the beginning it's so, but over time it will become easy to apply. However, I have written an ebook of over 100 pages, where I explain in detail every aspect of the strategy with many examples. The ebook is free and you can download it from my website. You find the link below in the description. I thank you for the time spent watching this video. I hope what you have seen could help your trading. For everything, you can leave a comment in the section below. The only rule of my channel is good manners. And if you liked what you have seen, then subscribe to my channel by clicking on the icon below to be always updated on the next videos. I thank you again for your attention and I wait for you at the next video. Happy trading to you all!